Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And with that, today we're taking a look at Albemarle Corporation, ticker symbol ALB. This is one we've reviewed on the channel before, and the share price has fallen once again to a point where I think it is an attractive buy. Now, I recently did a intrinsic value calculation on Albemarle and found it to be quite a bit higher than where it is now. So if you're interested in that sort of thing, you can let me know, although I realize there are other channels that do such things with far more detail than I can present here. In any case, Albemarle is a chemical company, and it is perhaps best known for its lithium operation. If you see electric vehicles as the way of the future, then of course lithium will play a huge part in that, at least until the technology advances to the point where we can use some other kind of compound. So at the moment, Albemarle, being one of the world's largest lithium suppliers, plays a huge role in Tesla and other EV companies. And at the moment, this is a mid-cap company with a market cap of $13.5 billion. And here we are on Albemarle's annual chart, and you'll see it is well below all the moving averages. And this steep decline for the last few weeks has just been an inexorable march down, and we are just off the 52-week low. Of course, 52-week low does not mean undervalued, and 52-week high doesn't mean overvalued, but still, this is a good spot to look at, and it's one sign that we might be getting into undervalued territory when we're here. And if we look at the other metrics here, you'll see the RSI is just edging into oversold territory. Both stochastics are oversold and look to be moving sideways, if not up again. And we have increasing selling pressure on the volume chart. The MACD is still falling. It crossed below zero quite some time ago, and it's looking like the momentum is still downward. And overall, I would say I would have to agree that the momentum for Albemarle is still down. It looks like it's simply going to keep traveling lower, at least the share price is. Whether or not that's warranted, I will leave up to you. But again, this company does have significant revenues and, what, in my opinion, at least a good future with the EV markets. Now, I'll also point out that Albemarle produces numerous other products, far too many for me to detail here, but they are involved in all sorts of chemical productions that are needed for a multitude of other businesses around the world. So it is highly unlikely this company is going out of business anytime soon. And if we look here on the fundamentals, just as a brief overview, you'll see institutional ownership at over 83%. Is quite good. Short interest is rather high at 12%. And the debt to equity ratio here shows that it has less debt than 64% of its peers in the industry, which is a positive thing. Of course, we know they need debt. This business requires a lot of heavy equipment. So having debt here is not unwarranted, but the fact that it has less debt means it is more likely to survive an economic downturn. And we look out here at the PE ratio, which shows you it is below the industry standard, less than 77% of other companies in the same industry. And PE is only just above 4.08. So that's certainly one sign of undervaluation. But again, that's not the end all be all of undervaluation or overvaluation signs either. No single metric would be, but you can take that into consideration. Gross margin is above average, beating out 65% of other companies in the industry. Gross margin is just below 30%. The operating margin is just shy of 20%, which for something dealing with natural materials like this, that is excellent. And that in fact beats out 89% of others in the industry. And a net profit margin of over 17% is also quite good. And return on equity shows it beats out 90% of other companies in the industry. And return on equity of almost 40% is, again, outstanding. and return on invested capital of 13.15% is likewise good in a business that typically does not have huge margins. The growth rate here is truly impressive. It beats out 92% of others in the industry. And we have a dividend here. That's nothing to write home about. The dividend is 1.36%, which is below the industry standard and just slightly above the market average. But the payout ratio is less than 6%. So this is an extremely secure dividend, which is perhaps the best thing you could say about it. In any case, I do think Albemarle is one to watch now. And if you don't have any shares, this wouldn't be a terrible time to start picking up a few. But let me know what you think of Albemarle in the comments below. And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. These videos are for entertainment, discussion, and education. But if you'd like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.